Addicts. Welcome to the weekly watch list. This is Jeff Kohler, aka Option Addict, over at www.tradingaddicts.com. Back from a nice, long, extended weekend, chock full of good eats, and ready to talk about stocks and ready to make a little bit of money this week. So let's talk about the S&Ps. First off, I'm a little disappointed that surrounding the holiday, what is traditionally a pretty bullish time of the year, from a seasonal perspective, the market just really couldn't seem to get it done. Prices looked pretty ugly on Friday too, the half day. I took that day off, but nonetheless, prices as heavy as they were selling off. I know futures are up here a little bit, and they look pretty good, but I still, here's the little range that I think you want to watch out for. If you're a bull, naturally you want to see this little reversal pattern invalidated, and the reversal pattern I speak of is this little head and shoulders pattern that's setting up. Shoulder over here that formed late October, head up at the beginning of November where the market topped out, and then we've been staying underneath this 20-day moving average, basically up against 1200, trying to get above that, but haven't quite yet been able to do so. And here it is. You can see prices here recently have coiled up pretty tightly. So the breakaway from this, I think, ought to point to the next directional movement. Now, this ought to coincide with movement in the dollar pretty well, right? If you look at, let's say, the UUP, we're up against and pretty darn close to a level of significant resistance. And this dollar, I would think, would be pretty tired now at this point. So if the dollar can get up here, and that level I thought we'd see would be about 23.40, give or take, and we're not quite there yet, but enough to where we might test the lower end of that range in the S&Ps one more time by the time the dollar tops out. The VIX is also up the upper end of its trading range too, so by the time it gets up here to, let's say, 23, maybe 23 and change, it might get tired there as well. And so that might be, if the dollar rolls back here a little bit, a chance for equities to start to bump up and start to bottom here short term. They looked pretty heavy last week, and so I don't like them. But in order for stocks to move up whatsoever, I think you got to see a little bit of dollar weakness. I think that's kind of our last hope here heading into this week. Otherwise, that reversal pattern starts to hold. And you look at what emerging markets have done, right? They've already kind of led to this point. The EEM has already broken down beneath this neckline, confirming this same reversal pattern. You'll see it in individual countries too, like Brazil, China. The FXI looks nasty. When emerging markets lead like this, and it's usually only a matter of time for the S&Ps to get crushed. And I still want to watch copper here. Copper hasn't exactly broken down yet, and there's been a strong correlation between copper and emerging markets. So as long as copper can hold up, as long as that dollar can start to slow down, equities have a chance to bottom here and maybe start to rally, at least for a couple days later on this week. So that's what I'm looking for. But what I'm really looking for, guys, is individual setups. So let's start with some buy the dips and some sell the rip candidates. Take a look. Now, the price patterns is honestly where it's at this week, guys. I got a lot to go through, and I'm going to start with the energy patch. And we'll look at the DIG, we'll look at the ERX, and we'll look at the OIH. And you'll see that consolidation, that triangle across all three, right? And DIG, you'll see here, it looks really nice. So does the ERX. A couple individual equities I like too in the energy, oil, gas arena. I've got quite a few. Let's burn through them real quick. HLX, same pattern. OII, very similar pattern. You can see the consolidation going on right up here near about 69, 70 bucks. TTI, not the same pattern, but a bottom that looks ready to confirm that I'd want to watch for a breakout north of 11. BEXP, which we talked about last week, Trading Addicts, you guys will remember that. Looking for the breakout here in this name. CNQ, which I'm going to have to zoom out. You got this nice little coiling pattern that we saw in the ETFs, but if you zoom out just a little bit, take a look at this fantastic looking rounded bottom formation ready for a breakout. CPE, another name I think you got to like right here, especially with this recent price action. This thing looks ready to snap. And take a look at volume on Friday. It's pretty significant considering it was a half day, right? CPE looks good. GTE is another name we've been watching for quite a while. And then last but not least, CRZO. So that's all I've got for energy, oil, gas, natty gas, whatever. Anything in that space, that's what I like this week. On over to materials. I checked in for, I won't lie, I wasn't totally away from the computer on Friday, but I looked in and I saw U.S. Steel was trading pretty darn well. And I believe Steel Dynamics caught an upgrade over the weekend. I think that's what I saw. Anyways, if steel names open up, trading pretty well. I think you might want to go after a long here on U.S. Steel, looking for a break back up to the upper end of this range and above that 200-day moving average. This thing should get up north of 50. So that I want to be watching this week is U.S. Steel. Also, CLF. CLF's the name that we almost took a long in early last week. Kind of held off, wanted to see how equities would improve, but this is a name I definitely like this week. Good continuation pattern up here near the $70 mark, and I think once it gets up above these highs, which I think if you're going to trade this, you want to anticipate it, but the breakout here should be significant, and CLF ought to rip. Century Aluminum, if you're, again, looking at materials, this is another name that's setting up for a continuation pattern here up near its highs. Let's see, materials, I think that's just about all I got. Yeah, so let's move on to a couple other names. MGM, casinos. Down here with the stop near 12. Looks like a big consolidation pattern forming. North of 13, if this thing gets up above 13, I think it'll break higher significantly. And that, again, that's going to be based on equities rallying. So watch that. Watch this cup and handle pattern here in SPRD. That probably sets up tomorrow. So I think you want to watch this one off the open. CCME I think looks pretty interesting down here. Not until I see a little bit more volume behind this, but a breakaway from this should be pretty significant, at least to retrace maybe 50% or so of this big breakdown it's had. When we talked about the head and shoulders pattern in emerging markets, I think if you want to look at that EDZ, that looks like a nice little reverse head and shoulders pattern down here near the lows, so that's something to keep an eye on too. I also like Take-Two Interactive. I like this consolidation pattern up here. It's coiled up pretty nicely. And that's a stock that's due for some volatility, so I would keep an eye on that name. I also like FNSR. You guys know I already have a position here, so I like that. JDSU. Pretty similar setup, in my opinion. It looks like this thing actually broke on Friday. Now, the volume wasn't there, but remember, it was a half day, so it ain't going to be there. JDSU and then Juniper looks pretty similar to this as well. And little bit smaller, but same structure. Let's see, what else do I like here? Woof. Take a look at this. It could break out above about 22.5. Ought to bode pretty well for the stock. This thing ought to rip back up to about 24 or so. 200-day moving average is a target. CTL, gotta love this one, holding up really well, and seeing some decent volume up here near the highs. Rambus, we've been following this one for a long time, but this one might start to move. It's at a decent spot, too, if you want to anticipate this breakout. The next trade above the 200-day will be significant. Remember that. You heard it here first. Manitowoc, MTW. Again, I'm just looking for more and more patterns that show consolidations like this. And that's another one I think looks pretty good. Gap. We've been talking about Gap. I'm watching this one as of last week. We love the retail theme. These stocks should open up pretty well tomorrow. So Gap north of 21 is a buy. USU. You got to look at the 1-year chart to fall in love with this one. And there's the trade that takes you north of 6 all the way up to the highs at about 6.5 and then potentially higher. There's going to be a big move up through about 6 to 6.5 I think you want to be a part of. And last, which is a carryover from last week, was E-Trade. I haven't abandoned this idea yet, but I haven't bought it yet either. I'm still waiting for prices to start to agree with the analysis, and they haven't yet. So we'll continue to watch. Anyways, guys, that's all I got. I know I've run over in time here. But looking forward to a great week. As always, we've had an amazing stretch. We're on fire. Let's continue to keep up the good work. In the meantime, this has been The Option Addict. That's been my watch list. Thanks for watching. Have a profitable week.